Natalie MacDonald here, and it's time for our Targets in Focus interview, where we speak to an FX expert for their currency predictions. Today, we welcome Tom Liravongsa, founder and partner of Holland Global Trading, a forex fund based in Holland, Michigan in the US. Hi Tom, let's begin. The dollar CAD has been well supported so far this week, hitting a weekly high on this Thursday at 0.99687. Talk me through your 1, 3 and 12-month predictions for this pair.
Well, when we review the dollar CAD, we often look at the relationship of this currency pair in comparison to oil futures. Historically, you'll find inverse movements with the dollar CAD and oil. As future moves up, dollar CAD will move down and vice versa. So as we come into traveling season here in the States, most individuals will experience higher prices while traveling and then see a correction going into the summer months. However, that's not the case or the situation that it's been this year. The dollar CAD has been in a very tight range for the past 2 months, and we have yet to see a real reaction to the sharp moves up on oil in comparison to the CAD. So with that said, we are watching the current levels, the current ranges closely for a strong break. If the CAD can break the current support of 98.80, we can expect it to test 97 levels, or the 9700 levels, which is also near the 78.6 to the downside over the next month. If we look more into second quarter, or the midterm view, the dollar CAD will more than likely find strong support at the short-term 9700 level and react to oil's correction that will be happening during the summer months. As that plays out, we can expect the dollar strengthening against the CAD to find resistance near parity or slightly above that at 10.15 is kind of what we're looking at. If we look at a longer-term view, kind of towards the end of the year, now with it being election year for the U.S., that kind of introduces some special factors that we need to consider. The dollar index is a great tool that we can use during this time. You will be seeing strength in the dollar as we build up 2 elections in November. We can already see dollar index building good support. During the last election, if we look back historically, we actually saw the dollar CAD spiking to nearly 130 in a matter of 2 weeks during that time. So it may be possible to see those levels again, but it's a safer play to do trailing stops in this scenario versus just trying to put a trade in and play stops. You want to just trail this position, because if we had to put price action or prices on the price action, we can expect the trend to go up and test the 1036 level. If that breaks, we're going to look to start getting out of risk at 1065, and then follow it by possibly testing the 115 levels and then continuing to trail up to see if it hits the 130 again.
The Japanese dollar returned to its bearish trend earlier this week following a market freefall. The Aussie dollar has also been suffering this week, making its biggest loss against the greenback since mid-December. But what can we expect for the Aussie yen over the short, mid and long-term period?
The Aussie yen started off the month, like you said, it hit a strong resistance level of 88.60. We have had a bearish outlook on this pair at the moment for the short term. If we look at the 1 month here, if you look at the averages, you're actually going to start seeing divergence on this price action and losing momentum and wanting to move down over the next month. But we really see this pair testing support levels of 84.66 kind of before we start moving up to the upside. When we start looking at the second quarter, what we're going to see is a nice trend range up from that level. Aussie yen moves at an average of about 4% within the month. That's kind of what it's been over the past year. With this in mind, we can expect to see the Aussie yen wanting to test the top at 88.55, getting back to that level where it was feeling that resistance. If it does break that level, we'll start seeing resistance at the next level of 9,200. For the long term, really what we want to do is look at gold value in correlation to the Aussie. Gold has become increasingly more volatile over the past 2 years, which throw pairs like the Aussie off, but we do see this range up on gold, giving our Aussie yen kind of a little help, a little push to the upside to make new highs over the next year. If gold can see a high again of 1923, within this year, we can expect the Aussie yen to start seeing resistance at least 9,400 level.
The euro-dollar pairing came under moderate pressure earlier this week as the price rebound experienced a slowdown. But with no major stories driving price action for this pair, walk me through your predictions for the euro-dollar.
The euro-dollar has been a tricky pair this year. With so many fundamental issues to deal with, this pair has become increasingly difficult to trade technically. We finally are beginning to start seeing some technical setups on this pair as of this past couple weeks. For the short term, if we look at the 1 month, we're starting to see a possible rally at least to the 50% fib, finding resistance at 135 before wanting to make a correction from there. If we look at the second quarter, though, kind of midterm, it's probably a safer bet to play a scaling short position on this as instead of trying to ride that rally, because there's so much downside working against it. We have the dollar index strengthening, so that's not good for a long euro position. In addition, we have a major bearish trend line from the last few swings high. So those are the kind of things you want to be careful of. The first level of supports that we see to the downside on the euro dollar is at the 129 level, and then slowly working its way all the way down to the double bottom at the 2600 level for more of a midterm view. Over the next year, however, we run into the same scenario as the CAD with the election year. You need to pay attention to the dollar index and the S&P when it comes to this pair over the long term, mainly because of what's going to be happening fundamentally. 126 is the level to pay attention to. There's a strong possibility based on average movement of euro dollar within the month. We can see that price action soon again. If it does break that, we will have to look for support at previous lows in June of 2010 at 118.75.
Thanks very much, Tom. That's all we've got time for right now, but join me tomorrow when I'll be discussing the week ahead with Anders Mattsson, Chief Analyst from Nordea Bank Copenhagen. But for now, goodbye.